Global economic implications of the Israel-Iran conflict. The Israel-Iran conflict, escalating since Israel's airstrikes on Iran's nuclear and energy sites on June 13, 2025, is shaking the global economy. Iran's retaliatory missile attacks on Israeli cities have disrupted energy markets, strained supply chains, and sparked fears of a broader economic crisis. Here's how the conflict is impacting the world. Section 1. Oil price spikes and energy disruptions. Oil prices have surged. Brent crude hit $76.37 per barrel on June 17th, up 7% since the conflict began. Israel's strikes crippled Iran's South Pars gas field and Shiran oil depot, slashing Iran's oil exports from 242,000 to 102,000 barrels per day. Iran's attacks shut down Israel's Leviathan and Karish gas fields, cutting gas supplies to Egypt and Jordan. The Strait of Hormuz, handling 20% of global oil, remains open but at risk. A blockade could push prices to $120 per barrel, threatening a global energy crisis. OPEC's spare capacity may not fully offset losses if the conflict worsens. Higher oil prices are driving up costs for fuel, food, and goods, hitting consumers worldwide. Section 2. Inflation pressures. Rising energy costs are fueling inflation. Every 10% oil price increase adds 0.4% to consumer prices per Capital Economics. In the US, this could delay Federal Reserve rate cuts, while Europe faces higher electricity bills tied to Middle East LNG. Households are feeling the pinch, with the UK and other energy importers especially vulnerable. Persistent inflation could slow global economic recovery, testing central banks' plans. Section 3. Supply chain disruptions. The conflict is disrupting global trade. Airlines like Emirates and Qatar Airways have suspended flights to Iran, Iraq, and Israel, clogging air cargo routes. Shipping through the Strait of Hormuz faces risks, with electronic interference reported. Houthi attacks in the Red Sea further strain the Suez Canal, raising costs for goods from Asia to Europe. These disruptions, combined with U.S. tariffs, could delay manufacturing and inflate prices further. Section 4. Market volatility. Financial markets are jittery. The S&P 500 fell 1.1% on June 13th, with the Dow dropping 2% by June 16th. Gold and the U.S. dollar rallied as safe haven bets, while energy and defense stocks climbed. Analysts warn markets may be underpricing risks, with a prolonged conflict potentially triggering a deeper sell-off. A Strait blockade or attacks on Gulf oil facilities could spark a recession, per RAND experts. The Israel-Iran conflict is straining the global economy, with higher oil prices, inflation, and supply chain chaos threatening stability. As diplomatic efforts falter and tensions rise, the world braces for more uncertainty. Thanks for watching. Hit that like button and subscribe for more amazing content.